What up? What up? Get my lighting right. How you guys been? Good? Tight. Tight. Face is all shiny. Hold up. Two people, what's good? The name's Dub Digital. I come up on the internet twice a week. We talk about crypto. It's been 3 times a week actually now. But usually it's Tuesdays and Thursdays, 12 p.m. Pacific Standard Time. Don't know if I can do a Saturday this go round. But yeah, Tuesdays, Thursdays, 12 p.m. Pacific Standard Time regularly. So, what up? What up? How you guys been? Good to see you. Good to see you. Definitely would want to be you. Get a drink. In my younger years, if you've been following the channel, I'd say drink it if you got it. Smoke it if you got it, but I'm turning a different leaf now, y'all. I'm getting older. All responsible and crap. It's crazy. 7 people, what's good? How you doing? Let me know who I got here, guys. Come on. Come on, I gotta know. I gotta know. Streaming on X, YouTube simultaneously. If you're not following me on YouTube, make sure to do it. It's at Dub Digital. If you're not following me on X, please do so. I'm trying to get my numbers up. And I just post more things on my X account just because it's like articles, videos. And we're going to look at 2 of the videos that I posted today on my X account. It's at Dub Digital with 2 U's. Original, I know. Chris, what's good, Chris? How you doing? Good to see you. What up, bro? Xavier, how's it been, man? How you doing? Good? How's Texas? Howdy. I'm gonna kick. I got like, so I quit coffee recently. That's been crazy. Crazy in the worst way. No, because one day I couldn't get coffee and I was like, what is going on? I got this crazy headache. It was like bad. It was like in my soul. Like the center of my head. I was like, this sucks. And then I realized I didn't have coffee. And I was like, well, okay, I guess I went through the withdrawals already. Let's just stay off it. What do you think of base, degen, and normie? Base, degen, and normie? What do I know about base? You talking about the layer 2? Isn't that like backed by Coinbase? Yeah. Are they trying to make base like the #1 withdrawal place for USDC bought on Coinbase, like super easy and compatible Coinbase wallet? I think that's an interesting play. I mean, that could be a lot of money that could just flow right into base, you know. But as far as degen and normie, are those meme coins on base? I'm thinking the meme coin culture on base is probably going to be wild at some point. You know, we saw a lot of, and that's how it goes, guys. The layer 2s are kind of fighting for easy withdrawal of liquidity. Now, this is a different kind of take because typically Binance Smart Chain was easy to get on off of Binance into Binance Smart Chain. And also a lot of bridges were built from Ethereum to Binance Smart Chain when Ethereum was dropping the ball. Like they always drop the ball on gas fees. So it's kind of like layer 2s pump and a lot of things on layer 2s pump because the method of which it's easier and cheaper to transact in and do DeFi, swap, get into meme coins, all that. But no, man, I don't know about base and normie. Are those meme coins? I think meme coins on base are interesting looks right now. I mean, Solana meme coins have been going crazy. And I don't, you know, like, okay, I know why. Okay, this makes sense. So I know why Solana meme coins been popping off. You guys haven't used Phantom Wallet. Phantom Wallet, I've been saying since last year. Since like basically like the Solana NFT thing was going on, Phantom Wallet is kind of one of the best wallets. I'm just gonna be straight up. It's so easy. You can get your NFTs. You can stake your NFTs right from the wallet. You could swap right within the wallet. It's so easy to get into coins. It's like right there. So it's like you're starting to see that ease of use actually matters and actually has like an effect, right? Because like, let's be honest, guys, we're weirdos, man. I'm gonna spend an hour or 3 to try to figure out how to do this one very nuanced DeFi thing. Like, I'm not the norm. You're probably not the norm. Most people don't do that. If you do that, you're probably able to get in projects much earlier. But like, you know, the majority of people ain't gonna do that. It's when the gates are open wide. when a lot of that money could come in. 19 people. Wow, I'm blessed, man. I'm really blessed. I'm happy. It's good to see the numbers come up. We're having some good numbers last couple weeks. I don't know. I think most of them are on X though, which is interesting. X family, I love you. And make sure to, X fam, I want to hear from you. Type things in the chat. Tell me where you're at. Why not? Howdy. I heard the accent, man. Nice. Yes, and those are a couple of memes. That's cool. That's cool. What else? Cheap and quick. Yes. Love it. Tight, tight, tight. Are you talking about base? Oh no, you're talking about Phantom Wallet. I love Phantom Wallet, man. Airdrum, Aerodrum on fire. Oh, you're talking about the base decks? Yeah, yes. Super Nerf. And that Majestic Beard told us about Aerodrum, which is a Dex on base last time. Let's see what it is, what it's doing. What's the ticker? Arrow? Yeah. Yeah. See, so guys, you see how it goes? This is why I like Dexes a lot. Oh man, freaking what? Hold up, let me show you this. You're not lying, at least you're not lying. Oh man, this thing's freaking pumping. I mean, hey, I'm just I'm just telling you, this looks kind of like Rising Wedge-ish without like plotting it on TradingView. Like it looks like you see that bottom trend line right there. I mean, it's not like it might be able to go for some time actually, but looks like that's happening. But for the time being, congratulations. That's a big, 84 cents from 8 cents? Wowzers. So if you were in base, that's going wild. So this is base, guys. You could tell if you don't know, the contract number down here tells you what chain it's on. So I just wanted to go show you guys, like, DeFi is not an enigma. Things don't just happen randomly. Like, it's the flow of capital. Usually there's some kind of catalyst or incentive to suck the capital in it. The capital comes in it. And then it has to go through the DEX, right? So people love DEXs because that's how you get early coins. That's how you get coins that are before they're listed on exchanges. Caveat is if they ever get listed on exchanges, but then the DEX goes crazy because it's swapping, it's collecting like transaction fees. People are liquidity, like staking liquidity in there, yield farming. Like the DEX is the economic nexus point to the chain, right? Like the chain does not function well if the DEX is not functioning well. And that's why like I tend to like to get into DEXs. Like it's kind of like, to me, it's kind of like the index fund of the chain itself, right? Like, yeah, you could pick the like book of memes, like 2,000, 5,000% hyperbolic meme coin, but do you know the risk involved with that is wild. It's almost not worth it, man. Like, hey, have I gotten some meme coins that did well? Yes. Have I also gotten some meme coins that rugged me? Yes. So it's like, take your pick. The DEX itself could also make pretty good gains. Very good. Okay. And we've seen that, I'm going to show you. Remember Saucer Swap on Hedera? Hedera was doing just okay, the layer 1, right? The money comes to layer 1, then it goes into the DEX. So H-bar, let me just show you real quick. Can't spell right now. What's new? 30 people. Hello, hello. Make yourself comfortable, please. H-bar just did this, man. It just went from like 6 cents to 13 cents. And then Saucer Swap did this. You see what I'm saying? Because like the layer 1 always has more liquidity, right? Because everything's built on the layer 1. But then it starts going into the DEX. And this is the premier DEX on Hedera. And it only had like, now the market cap's 90 million, which is pretty insane. It's coming down that correction I was talking about, right? But then I'll show you, because I know I got some Grelf homies out here. This is one of the biggest meme coins on Hedera. Grelf. It's at 8 million. And it did that. So, guys, it's not an enigma. It's not just like magic. It's not pixie fairy unicorn dust that gets sprinkled on the thing and it goes up. It's like the flow of liquidity through an ecosystem. The sooner you understand the ecosystem, the more you can take advantage of the ecosystem, right? Thanks. No problem. Looks like RWA crypto kind coins will be upcoming trend. Because you said, well, not you said, but Larry Fink said. You guys don't know who Larry Fink is. I think he's like the head of BlackRock. I don't know his exact title, but he's like the head of BlackRock. And he basically came out and said that tokenization, like real world asset tokenization, is like what they're very interested in. They might be looking into do some kind of fund for real world tokenization, because he said every stock, everything is going to be tokenized, which makes sense, right? Digital currency, digital ownership deeds, right? Digital everything. Like if you could run everything on the blockchain, it's cheaper, right? You get rid of a lot of the fees involved. It's cheaper for everyone. It's more profit. Guys, it's going this way. They want a digital future. Everything, ownership, digital, 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 right? So like it's coming at some point, but it won't be the only trend. It will not be the only trend, right? Now we start to talk about real world asset like coins, right? Okay. Look at the trend, right? Before the Bitcoin ETF, everyone said, oh, you know what? It's just going to be Bitcoin. That's it. False. Larry Fink just told you it's false because Bitcoin doesn't tokenize assets. So put the two together. Do I have to be more explicit? Okay, I will. They're going to start pushing for products that are altcoins. All the only things that tokenize assets are altcoins. They're all altcoins. He's talking about legitimizing altcoins. Bang. Think Velodrome on Optimism will follow. I think there'll be a fight on layer 2s. Because isn't Optimism like seeded by Coinbase? Aren't they involved too? That's interesting. Sounds like Coinbase is bullish on layer 2s, right? They missed out on the Polygon pump and they're trying to, get involved. There's a lot of layer 2s now, man. Like Base, Polygon, freaking, what do you call it? Metas. What else? AVAX, right? They're layer 2. Think, yeah. Then you got Optimism. Then you got all these other ones that are popping up. It's pretty wild. I think it's good. I think it's healthy. Obviously, Ethereum's not doing a damn thing, so let's get it done. You know what I mean? Like Binance Smart Chain is essentially like an alternative to DeFi. I mean, you can bridge to it, I guess. So like you're starting to see all these alternatives where DeFi can be had. DeFi is where it's at, son. I'm telling you, DeFi. The second I saw DeFi, I was like, I can make money off my crypto. It used to just sit in my closet. Now I can make money off crypto. Everyone loves that. Everyone. And when things get frothy, you're like, I just made 100x and I can make yield off my 100x. You mean I can live off the yield of my crypto stack? That's coming. In a blue sky breakout, DeFi is it. But DeFi can't happen on the chain that DeFi was founded, which is so funny, right? It's too expensive. Thus, the layer 1s come into play, right? I mean, the layer 2s, my bad. But the one thing that no one's thinking about, or maybe they are, maybe I'm not giving them credit, but how do you bridge? Like if you do stuff on layer 2 to get around the gas fee, you still have to like port back into layer 1, and that's expensive. Every time you deal on the layer 1, it's expensive, which could basically erase all the yield that you got. Unless everyone just goes chain to chain on layer 2s. How many bridge infrastructures bridge layer 2 to layer 2? Not that many, at least in a decentralized way. That's why I'm thinking, honestly, I think Wanchain is going to get a lot of inflow of capital from bridging layer 2 to layer 2, because a lot of bridges are just still trying to connect layer 1 to layer 2, layer 1 to layer 1. Telling you, layer 2 is going to blow up, and then people are going to be like, I got to withdraw on the ETH, and it's going to cost me $400. Man, my yield was $400. I see it happening. Same dev. Interesting. What your deck's pick on Phantom? Not on Phantom, man. I dropped the bag on Phantom. Funny thing was I was in Phantom like 2020 early on. I was staking too, but I had the hardest time taking it off. Then I sold it like a noob. Sucks. So like I don't know. What do you like on Phantom? I'm not in every chain. Not in every chain. I tried to be on every chain last cycle, and that was a mistake. You guys don't need to be on everything, right? Like I say under 10 bags. Why? Because how are you going to manage them? You got to manage them. Some of these things spike overnight. You're like, dang, I wasn't even looking at it. Now it's down 80%. It's like, you know what I mean? So realistically speaking, without trusting having your bags on centralized exchanges and setting like buy goals, because I'm not big on that either, right? Everyone says, oh, set a stop loss, set a this, set a that. It's like, yeah, but then I'm giving up my custody of my crypto, which is dumb because like in my mind, I've been in space enough to know one of the biggest reasons people lose crypto is having uncentralized things. Yeah, you can get wrecked, just holding your crypto, but you could get rugged putting it on a centralized exchange, So like, I'd rather at least have the crypto in my hand. Why? Because I've had it happen to me before. Not again. Hello, everyone. Mark, how's it going, man? Good to see you. Real world assets, RWA. Black Rocket want to sell those. BlackRock. We're going to look at some stuff on the Fed really quick soon, but let me get down to the chat, and then I want to show you something that no one's talking about, unless you're following it, which not a lot of people are, or you follow me on Twitter. What's good, Dub? Salute. How you been? Happy March Madness, Daddy O. Red Belly compliant asset tokenization. Oh yeah, you've talked about Red Belly before. Cool. Red Finance on Near Protocol. Synther, my DeFi play this cycle. Interesting. Yeah, man, I just collect dexes. I like dexes. Because we know that this money's coming, and what I'm going to show you on this Federal Reserve thing is telling me money is coming. Might not be just right now, but they're starting to slowly turn the behemoth oil tanker in the ocean. It takes a while to turn around, but they're starting. They gave the signs. They already gave the signs. Synther bridges layer 2 to layer 2. It's omni-chain. That's cool. Look, I'm not saying there's only one bridge. What I am saying is there are not many. There's not many at all. And even if there are some, not all of them are decentralized. There might be a few. You know what I mean? A few protocols that service a huge amount of money is like opportunity. I'm always looking for something where it's like, okay, yeah, there's a million of this, there's a million of that, this and that, whatever. But where are the things where there's a big problem and not a lot of things to fix it? And that's a big opportunity to me. Cheers. But let's go on over to what I want to show you guys. I think this is some alpha that not a lot of crypto channels will show you as alpha, but it definitely is alpha. This is the Federal Reserve press release from yesterday. They met March 20th. I'm going to read it real quick. Why? Because this is important, guys. Not everything feels good. We got to do the hard work, and then we're going to talk. I'm going to show you a couple of videos. And this is going to tell you and show you how monetary policy completely dictates what happens to crypto. It's all about what the Fed does. That's all. That's it. Just follow the Fed. Recent indicators suggest that economic activity has been expanding at a solid pace. Job gains have retained strong and unemployment rate has remained low. Inflation has eased over the past year but remains elevated. The committee seeks to achieve maximum employment and inflation at the rate of 2% over the longer run. The committee judges that this risk to achieving its employment and inflation goals are moving into better balance. The economic outlook is uncertain, and the committee remains highly attentive to inflation risks. In support of its goals, the committee decided to maintain the target range of the federal funds rate at 5 1/4 to 5.5%. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and balance of risk. The committee does not expect it will be appropriate to reduce the target range until it has gained better confidence that inflation is moving sustainably towards 2%. In addition, the committee will continue reducing its holding of Treasury securities and agency debt, agency mortgage-backed securities, as described in its previous announced plans. The committee is strongly committed to returning inflation to its 2% objective. In assessing the appropriate stance of monetary policy, the committee will continue to monitor the implications of incoming information from the economic outlook, which means they're open to changing their outlook, their stance. The committee will be prepared to adjust the stance of monetary policy as appropriate if risks emerge that could impede the attainment of the committee's goal. Another signal that they're open to changing. They will change. The committee's assessment will take into account a wide range of information, including reading on labor market conditions, inflation pressures, inflation expectations, and financial and international developments. So that said a lot of stuff, right? It's basically what they call the Fed starting to say, you know what, we want to get to 2%, but you know what, we're open. Depending on what happens in the future, we're open to maybe, changing it up. That's very different than what the Fed's been saying. We're raising rates. Remember, for about a year, raising rates. It was the fastest rate rise, I think, one of them in history, not the biggest rate rise in history, but in the recent history. And then they started saying, you know what, we're going to hold it steady. We're going to hold it flat. Rates just held there because things are starting to get shaky and falling apart. Now they're going to start reducing rates. And why do I say that? Because one of the banks, which is the Swiss central bank, they just started cutting rates today. Let's see what they say. Wait, this is not the one. My bad. Hold up. This is the one. 40 people is good. Wait a minute. I don't think you hear it, huh? Shoot. 1 second. Remove. Stop screen. Share screen. There we go. Let me know if you can't hear it.
Cambridge University. Mohammed Al-Arian is here, Chief Economic Advisor to Allianz, President of Queens College at Cambridge University, and a Fed. Are you a whisperer? What are you? A
observer.
You're a Fed observer. Did you think it was dovish, more dovish than you were expecting yesterday?
Oh, absolutely. And in two ways. One is a signal that they're willing to tolerate higher inflation for longer. And second, something that is flying below the radar screen is what Chair Powell said about QT, said about the balance sheet, saying that he's willing to slow down the journey to a lower balance sheet. I think that twin patience means that we may well look back on this week as the week in which central banks stepped away from a very strict inflation target to a much broader concept of an inflation target.
And this has, in your view, nothing to do with the election.
So I would like to believe the Fed in saying that it is apolitical.
You would like to believe? Do you believe?
Look, I have no other reason to believe otherwise.
Well, it was weirdly dovish, and I keep bringing up that suddenly it seems like the asymmetric risk is now of a recession after we've had two really hot inflation numbers.
So I was with you when you asked me what does the outlook look like. I told you 55% soft landing, 30% recession, 15% something better than that.
Oh yeah, I remember.
And I think that they realized two things. I think they realized that the economy is weakening, but they've also realized, or I hope they're going to realize, that we are living in a world in which the supply side is the problem, and that we need to tolerate slightly higher inflation if we don't want to sacrifice the economy. And I think that's the right thing.
Supply side is the problem because why? Is it because governments are still spending so much? The United States government is still spending so much money. I mean, it's weird to have fiscal doing one thing, monetary doing the other thing.
Correct. And we should be doing more to enhance the supply side. It is the problem first because of geopolitics. We are redesigning supply chains. Second, companies are emphasizing resilience as much as efficiency. So they are embarking on a more costly supply chain for good reasons. Third, the labor market is not as flexible as we'd like it to be. And then we're looking at a very uncertain energy transition. You put all that together and supply will not be flexible enough, and the Fed will have a choice. Either it accepts slightly higher inflation,
Bang.
or it unnecessarily tips the economy into recession.
What's to say that the inflation remains slightly higher and doesn't get out of control?
That's the bet. That's absolutely the risk. But there's
He said they have a choice to make. Either we accept slightly higher inflation or we collapse the economy. Becky Quickson comes through and says, well, what's to say that it's only going to stay slightly higher and doesn't run away? And he says that's the risk. And that's what I've been saying this whole time. The Fed has no choice. They're in a rock and a hard place. Everyone's saying like, oh, like they're going to bring it down. They're going to keep raising interest rates all the way up. It's like, are they willing to have another Great Depression? No, they might be willing to if inflation is like going ham. But it's not ham yet. People aren't, struggling that hard yet. In order to crash the economy, they need a big, reason. They need people to be being, hey, bring this gas down. I can't get to work. Okay. Boom, 20% interest rates. You told us to. They need plausible deniability. They don't have it yet. So they're gonna let their foot off the brake. We heard them saying we're open to turning the interest rates around. We're open to reducing. So they're starting to signal. The market's gonna start pricing it in. And I'm gonna show you one more what do you call it? Video. Real quick. And this is BlackRock talking about the Swiss central bank's decision to reduce rates that happened today. And I don't see a lot of anyone covering it. But it's definitely happened. Let me check. Cool.
We've been waiting for this for a long time. The market has been pricing it and had to come off. And now, basically, the first one is out of the gates. Not surprisingly that it's the S&B, in the sense that Switzerland had by far the best inflation record
Swiss
through
National
this
Bank.
difficult period of the pandemic. So it's a courageous step, but perfectly justifiable when you look at the inflation forecast and the inflation data these last couple of years.
So what does a policy mistake look like? Not from S&B, but also for others. Is there a danger that actually if you cut too quickly, then inflation actually is rampant under control, and so it makes your job double harder to get on top of that?
I think the main challenge they face, all the central banks effectively, and certainly the Fed, is that goods inflation continues to come down. That's the post-pandemic adjustment. That will settle at roughly zero, which is where typically historically goods inflation is. What is not going to happen, in my view, is service inflation is not going to come down. We have very strong labor markets. Wages are strong. And so my guess is service inflation is going to turn out to be sticky when it settles. And in combination between goods at zero and service inflation somewhere around 3%, let's say, that suggests to me that what we're going to end up with a kind of a rate that is going to be higher. And so I think what you're going to see is a higher for longer story that will ultimately kind of feed through the the short-term adjustment of rates now beginning to ease, policy rates beginning to ease.
You heard it here first, man. Central banks move in tandem. The people think the U.S. Federal Reserve is going to lower rates first, but you understand currencies. Central Bank of the U.S. is basically they have the World Reserve the World Reserve currency. They're the flight of safety that all the other currencies go into. So if the United States is experiencing inflation, it's always going to be less than what all the other world currencies are experiencing. So what happens is we're going to start to see all the other central banks start to lower their interest rates first. And then it's going to happen slowly and pick up. And then the US Fed's going to lower it. And then it's going to be very apparent to everyone. And then easy money is going to come back. It's going to juice freaking risk on assets, which crypto is. And it's going to be a beautiful thing. It's going to be a beautiful thing until it's not, until the inflation gets too crazy. And then expect some overnight announcement that, hey, we gotta do something about this. Raise interest rates 20%. Bang. We've seen that happen overnight in the 70s. Paul Volcker did that. But it would be too suspect if they did it now without a real crisis. They need a crisis people care about. They need a crisis that hit you right in your wallet. They're going to give you one. Guys. B Cashy, sub dub, how you been? Good to see you. Every quarter, slightly higher, guys. You take 2 steps, you take 1 back, it's still forward. They will need an event to get out of this one, LOL. Definitely. US dollar equals the cleanest dirty shirt. True. It's the dollar milkshake theory, guys. I forgot who coined that, but basically everyone, once their currency starts inflating, starts to hoard dollars instead because they're widely accepted all around the world, especially for energy. But, you know, since Saudi Arabia made a pact with Russia to accept their currency, they're accepting yuan now. So like that whole need for the dollar around the world is starting to not be as certain because you can buy oil with other currencies now. So what's the petrodollar? Like, see, these are the things they're telling me, like Bitcoin is going to go up in the future and like this year. I'm going to hold to that. We'll see though, guys. We'll see. Let's take a look. What's happening on CoinMarketCap? 32 minutes in. Let's see. So, if you didn't know, crypto took it dumped yesterday, I believe, to 61,000, 60,000. Now we're back up to 65,000. I think we're at 66 earlier today. Let's just do a quick heat check. You can see some of that. I mean, Alta's still up double digits, which is, pretty good. Not the end of the world. Dog with half down the most. Floki down. All meme coins are down. Render down. But see, I mean, the lowest percentage down is 12% in 24 hours. The highest is 28%. So you do the math. The market is more so bullish than anything. On the fear and greed, we've backed off a little bit in 82. I think earlier today it was like in the light green, which is okay, guys. We can't just stay like balls to the wall, full throttle, foot down on the pedal at 90% the whole time. The market has to cool off a little bit, right? 7 days, Ondo up 43%, Jupiter, that's another Solana up 40%, so on and so forth. I really think Solana's getting pumped because how easy their phantom wallet is. Whoever made that did a great job. Bonk down 30%. Dog with hat down 27%. So it's interesting to see that these are 2 Solana projects right here. So their meme coins are down. When you throw this on Jupiter, which I'm not quite sure what that is, but I don't think that's a meme coins. People in Solana are diversifying further down into their ecosystem. And that's coming to a lot of other ecosystems as this bull run commences. You know what I mean? Xano, bro, upgrade went through today. Let's check it out. Hold up. Shoot, I just removed it. Let's see this thing. Up 14%, 12%. It's interesting, man, because there's no, the volumes more or less stay the same, but it's pushing up. So people must be like doing bigger and bigger buys on this. Who's ever bought it are probably just buying more and more and more. Interesting. So the fork went through. You guys know about Xano. It's a layer 1 that's going to deal with privacy assets, private assets. And I would think largely privacy coins. I don't think that dip is going to happen. Yeah, probably not. Yeah, probably not. No, it's okay. It's okay. I'm not trying to have like FOMO now, man. I'm trying to be more like chill nowadays. I'm drinking coffee now. I mean, I'm drinking like tea now instead of coffee, so I'm trying to be more chill nowadays, man. But yeah, guys, it's gonna be interesting. Let's jump over to Bitcoin. The Bitcoin. Cool. So I did this whole thing with Bitcoin's chart. This is a fib channel. We're gonna use the fib channel to help try to make determinations what's happening. All throughout Bitcoin's life, the pumps have been getting lower and lower on these fib levels. Even though it goes higher in price, technically speaking, the fib levels are it's reducing in that respect, right? This is kind of like a phase gradient of red. The darker red it gets, visually says more risk there is. Obviously, more profit there is, but more risk it is of collapsing. I think at some point, I don't know. There's a thesis that all-time high before the halving. Not sure about it, but if it does, based on the fib channel, that means we'll get around like 200-ish, a little over 200,000 Bitcoin. I'm saying get defensive of 150. If it goes all the way out to like say December, that's like 380. If you say October, which I'm more in line with, around 300. But again, start to get quasi defensive at 150. Reason I say that is, well, I don't know. You make your mind up on that. That's when I'm gonna start scaling. Definitely start scaling sizable chunks up into whatever, right? So come up with your scale out strategy if you would like. If you want, all the glory, all the gains, then I don't know. You could hold off in there and sell in one big chunk. Don't suggest it. You want the average of the move. You want most of the move. Leave with more money than you came, but it's all good. The reason I'm saying that, well, I thought there was on the weekly. Yeah. On the weekly, the RSI is kind of like in a rising wedge. I love rising wedges if you can't freaking tell. But that's typically like exhaustion. Ever since January 2023, it's been kind of doing this. I just found that recently, actually, and it suggests that the end of the structure comes around September. And if the RSI starts crashing down, I mean, that would be a very oversold RSI. I mean, the only time it was higher, I guess it got higher in 2013, which is funny. It's right around if you look at, like, I'm comparing the height of this rising wedge with the height of this RSI indicator in 2013. And I'm always kind of comparing what's happening here with 2013. So it can get more extended. It has got more extended in the past. But once it comes to this, these structures typically fall down to the ground by probability, right? So these fall out. That suggests that, around September, October, if it could fall out before then, but if it gets there, we might peak around there. That would suggest more like around 300,000 a Bitcoin. But Bitcoin's a small percentage of my portfolio. I'm not really looking at that. You guys know I like to look at Bitcoin dominance, which is also in a rising wedge. And it's been in a rising wedge before, and we had huge drop. This thing's going to drop, obviously, on the weekly. It's looking shaky. You can see the spikes right here. You go to the daily. This thing's just climbing along, but it has still yet to reclaim inside of the structure. The amount of time it spent outside the structure is kind of ridiculous. 86, 60 days. It'd pop back in, maybe 60 days out of the structure completely. This thing looks weak as hell. It's going to fall down, and it's going to pump all the altcoin bags, man. We're starting to see it already, and this thing barely dropped out of the structure approximately not even 3%. So dang, Bitcoin top around what is that? Is that Q4? Yeah, Q4, Q3, Q4, right? Altcoins indicating a drop in the first couple months. Be interesting to see how far it drops, man. But I think this is gonna be a big altcoin season. One, because we're starting to see pre-cycle coins like from 2014, 2017, 2020, all of them just popping up at the top of coin market cap. Bitcoin dominance has only dropped 3%, and we're seeing 2,000% in like meme coins and stuff. It's pretty wild. Before, the main meme coin was Doge, and then SHIB came along. There was like 2 main ones, but now we got like a bunch of them. This is indicating to me that this is more likely than not going to be magnitudes larger than the last alt run we had. And visually speaking, I mean, the structure of the rising wedge is magnitudes larger by like, it's 3 times larger than the last one we had. So, I mean, I could be wrong. I don't think I am. Time will tell. Imagine ETH, but the tokens you deploy for communities are private. Sorry, not trying to induce FOMO. LOL. I know, man. I gotta keep my heart, calm my heart, you know? Mi corazón. I know October, November would be a great event for the Fed. A no vote? What do you mean? What do you mean by that? But, and here's another freaking thing, guys. Like, the election's gonna come up. Like, what is it? It's in November. They want to pump this thing to the sky. You're already starting to see the Fed start to be like, well, we're open to changing our minds. Oh, you are, huh? Did Joe say anything? And you're seeing Switzerland turn around. If you guys don't know, Switzerland is a big player in the monetary world. You ever heard of a Swiss bank account? Yeah. They're not just like, you know, they're not the central bank of Zimbabwe over here. They're kind of like respected. We'll see. Yo, Dub, live stream start early? No. I mean, I don't know where you guys are at, but we have like daylight savings. Maybe that's not a thing where you're at. I don't know. I know Arizona don't do that. I'm a fan of not doing it, but like, you know, isn't it? What time is it? Yeah. Same time, man. At least over here. Yo, Dub, how do you calculate the most profitable final all-time high for each of the coins you're about to sell with 20% tranche strategy? I mean, it's kind of TA for me. It's kind of TA for me. Like, I still got to look into some of the coins I got to try to figure out, like, I usually go on the monthly, right? I'll show you just what Bitcoin. Also, Ethereum has one too. Ethereum Classic. I haven't done it, so it doesn't look pretty. But I know I could do it. But look, and this is why, like, if it's a super new coin, you're going to have to use something like Elliott wave theory, you know? Which I'm not like, you know, it's not the most precise thing because Elliott wave theory gives you like a general height of how things can go, you know, the pattern, how it can go, but it's not telling you exactly how high it can go. And it's not based off of like history. There's just some patterns and wave formations that people can use. But like if wave 3 is this long versus this long, like it's very interpretive. But in terms of like, you know, I like to use channels, man. If you can do a channel, I mean, obviously Bitcoin has a nice channel you could kind of like see. And it has multiple cycles, so you can kind of see the depleting or diminishing of the height in the fib channel. That's how I was able to do it. Let's see what I have for Ethereum Classic, but I'm going to do this in case it looks too ugly. I'm just going to stare at a chart sometimes, you know, like what's happening. Let's see. I have. So this one. 50 people, how you doing? Say hi in the chat. I'd appreciate that. Not that one. We're just doing some like, you know, we're looking around. We're looking around. Yeah. I didn't fib channel this one, which I can. But I'm just showing you what I'm talking about. On the monthly, and the Ethereum Classic has been around. See, this is why I like 2017 coins, stuff like that, things that go back before them, because it gives me like the ability to see and like have mythology as to why I see it. Something like that, right? Just go over here, get a fib channel, throw that on there. It's going to give you the fib channels, and then you could like easily, more clearly plot. The reason I like Fibonacci sequence is because it's a pattern that happens throughout physics and science. It's just repeats and repeats, and it's a fractal of physics, right? So it also plays with charting as well. I don't know why it repeats. I don't care. I'm down with it. Yeah, just do that. Go on the monthly, get on TradingView. You can get a free one. I'm telling you guys, always have a TradingView account. I use the free one. I used to have the premium one. I don't use that many indicators. My things don't look like a science project. You see, it's like RSI, volume, a channel, a rising wedge, like a head and shoulders. Like it's pretty simple stuff. As long as you have some methodology behind why you think what's going to happen, it's all good. But if it's a new coin, you're not going to have that luxury. You're going to need Elliott wave theory, but still, even that's not that solid, and it makes it much more challenging. The newer the coin, people say, there's nothing that, like, once it breaks all-time highs, it's in blue sky breakouts. Yes, that's true, but you don't really have a framework or rationale as to when you should exit, when it's a good time to enter. It's kind of like you're flying blind. The profit is like huge, and the potential is huge, but it's also riskier. You know what I mean? I still need to go through more of my coins on that. Oscillators are different too. Like oscillators, I mean, what does Doge look like? A Doge. I got a little Doge. Just go on the month for something that's like multiple, like what do you call it? Cycles. That's gonna give you a good idea. And if you can't find a good spot, just measure the last cycle, understand how high it went up. That thing went almost like 10,000%. Wow. It's crazy. And diminish return it. You just got to have some rationale, because if you don't have rationale, you're just guessing, It's not bad. I mean, hey, like I've guessed before, but it helps you from like kicking yourself as I should have waited. Like, why did I pull here when it could have went higher? It's like reduces the regret. I don't know, man. What do you think are the odds of an hard fork for BTC later this year, as the community is divided again over how to scale? Could happen. I mean, look, it's kind of, I know you think this, it's kind of dumb if they hard fork again, because I thought everyone wanted it to be a store of value. But now that, like, the bull run's coming back, and they got a taste of like altcoins, and that's what they are. BRC20s are like altcoins to me. And they can't do anything with it because their Bitcoin was not made to be functional. Yeah, there could be a schism in the BTC again. But like, if they really wanted that, why don't they go to the other forks that occurred for the exact same reason? See, the problem with Bitcoin is BTC, that is that like a new wave of people come into the space and they see Bitcoin as the shiny beacon on the hill. They get into it and say, hey, I can't move this thing. And then Bitcoin goes, like BTC devs are like, yeah, it's not supposed to be moved. And say, hey, I can't swap this thing. Yeah, it's not supposed to be swapped. And then they really go through the existential crisis of why the BCH, the BTC, the other Bitcoin forks that happened, even Satoshi's vision occurred, right? It's interesting. It's like I call it a schism, man. It's exactly what churches went through, right? Like, hey, we don't like this. We're out. Split. We don't like this. We're out. Split. But, people don't like splits and forks. We call it, the split is actually called a fork in crypto. People don't like them, but they're necessary. That's why Satoshi built it into the code, because he knew at some point someone's going to try to corral Bitcoin and control it. Fork. That's what gives it like its unstoppable nature. But if you hold Bitcoin, it's cool. Like, I mean, I got my first Bitcoin Cash from fork. I wasn't mad at the fork. I was like, okay, tight. Now I got more money. See, I think people in crypto get too ideological about things. Like, I get it, guys, but like, chill out. You got more coins. It's all good. Thanks, man. Much appreciated. Anytime, Rocket Heart. I like it. Like it. We looked at Bitcoin dominance already. We can look at total 3. Total 3 don't look too bad. Reload. On the monthly, okay. Gave some back on the weekly. You can give some more back. I wouldn't be mad at it. Will it? I'm not sure. But I wouldn't be mad at it. You know, like how much did we really drop? $16, 18%. I was saying 50%. But whatever it does, I told you what's going to happen. We're starting to see the source of money, the Federal Reserve, the controller of the world reserve currency, dictator of monetary policy pretty much for the world, start to be like, you know what? I think we're being too, 2%, 2.8% inflation. Who cares? Like, it might be a little sticky. It's all good. We're pretty much done. Like, we are open to reverting back on our interest rate increases. Why is that important? I keep stressing this in your head. They control the flood of money. They reduce interest rates. All that fever that was occurring in crypto starts to leak even more back in. That fever I'm talking about was 2021. Guys don't remember, but the Fed was the reason the bear market occurred. Everything was fine. Bitcoin is about to blow up, and then the Fed comes in raising rates. Bitcoin's around its all-time highs again, and they're about to take the cap off of it, off of the money again. Bitcoin is about to do what it was doing in 2021 again. And if Bitcoin does that, altcoins go high as hell. This measured move measures about $7 trillion in altcoins. That might seem like ridiculous. I know. But it's possible. Because they can reduce interest rates. But that's just reducing interest rates. Will we have some kind of problem? If they have a problem, they're going to print. They're not going to let it fall apart right before the freaking election. Does that sound like? Come on, guys. Don't be so naive. Mr. Joe's going to want to be popular. He's not really winning right now on the talks. Right? The State of the Union wasn't good. Not for a lot of people, at least. So he's going to start having to bribe people. He's bribing people that live here, people that don't live here. So I just see it's a perfect year to do this. And 2017 was an election year too. Or was it 2016? Forget. Years have been long. But you know what I mean? It's set up. This is the year. This is the year, guys. And we're already, dang, almost 4 months into the year. Time flies. Getting wrinkles, man. But I'm ready. I'm effing ready. Are you ready? You need to get ready. I'm telling you. Told you here first. Hit that like. Please hit the like button. Subscribe. If you're on X, hit a like. Follow me. If you're on YouTube, do that too. It's going to be hot, guys. It's going to be hot. I'm telling you right now. In a couple months, all the central banks are going to turn around, and then all of a sudden, all your favorite crypto influencers are going to say, oh, the Federal Reserve is going to pump Bitcoin. Ain't no one looking at the central bank of Switzerland. That's the canary in the coal mine right there. It's Switzerland. Big central bank authority. And guess what? They had one of the lowest inflation rates over this period, and they're turning. They're starting to turn. Central banks work like a chain. That's how they control the global economy. They have a compounding effect on each other and coordinating work with each other. One central bank can't control the world economy, but all of them can. That's why every country has one. That's why they're called central planners. You know what I mean? So, hey, if you're new to crypto, just know Bitcoin isn't just some random thing. It was made in response to central banks printing. And central banks printing will be what takes crypto to its newest height. Don't you think it's funny that in 2020, we printed like 60% of all the money in existence in the US? And then Bitcoin runs up like 6 times from 10,000 to 64,000. Watch the money. Watch the money. They're not raising the rates anymore. So you probably could chill on the whole economic collapse narrative. They stopped that. Now that collapse probably will come, but after Bitcoin goes ham. And this is what I'm thinking, guys. Don't you think it sounds like a banker's plan? It's the perfect plan. Bankers all of a sudden embrace Bitcoin after they hated it for so long. They open products on Bitcoin. They start building businesses around Bitcoin. Then Bitcoin runs up super, super high. Inflation's going wild. The Fed says we got to do something. People can't eat. People can't like feed their children. So they raise interest rates to stop it, like they did in the 70s. Before they do that, bankers are selling at all-time highs. They're getting stupid cash rich. And then the economy collapses. Interest rates spike high. They bring housing down. They bring everything down. They bring assets down. And then they are so cash rich they can buy everything for cheap, right on the floor. That doesn't sound like something a banker would do, would they? They wouldn't be that sick. Of course they would be. But don't fight the bankers. Someone has to buy it. We can't control if housing goes down, right? So instead of trying to fight the current, swim with the current. There's always an opportunity. 51 people, what's up? Yo, DD, Mark of Melbourne, what's good? How you been? Don't fight the current. Follow the current. Flow with the current. And then you buy things on cheap. I think that's what's going to happen. That's what happened in the Great Depression. Roaring 20s into the Great Depression. There's a lot of turmoil and financial hardship and suffering in the Great Depression. But like a lot of millionaires were made in the Great Depression. And millionaires are probably today's billionaires. Train's coming, man. You can get off the tracks or you can stay on. Up to you. 55 people. What's good? Yeah, guys. I mean, look, we're already starting to see car prices come down. I mean, trucks are coming down a lot. A couple years ago, they were asking for way above sticker. Dealerships asking premiums. Ever since they shut the world supply chain down, prices have been like this. Eggs are $7. Eggs are $2. Gas is $8. Gas is $4. Boom, 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 boom. Housing's up. Housing's down. Everything's unstable, guys. It's showing instability. There's instability in the market. Volatility is picking up. It's going to pick up to the upside and then to the downside. Prepare. Late, will re-listen. No problem, Blind Dave. It's been good. And if you guys don't know, follow Blind Dave's YouTube channel. I think he does it his channel, his show, Hash It Out, today at 2 p.m. Pacific Standard Time. I'll try to stop by for a little bit. Can't stay very long, but I go there. And I think Xavier might be there too. Clint Westwood. Still know if Steak will be on there. We had a Crypto Blood on there last week. It was fun. It was fun, man. So go check Blind Dave's account out. Dub, do you have a job or you escaped the matrix? I work in crypto full time. So like I escaped kind of. I mean, I escaped my aerospace defense job. That was a good job, but you know, my heart was here. But yes, I work in the space. That's why I know so much about the space. I spend 24/7 in the space. So that's what it is, y'all. And to be honest, guys, like there's always work to be done. Like if you have the concept that you're gonna just get super mega rich off of crypto and then never do anything, you always have to be moving. You're either growing or you're dying, right? It's like I don't ever see me not doing something. I mean, like I'm a very entrepreneurial person, right? Like I like to see opportunities, execute opportunities. So I don't, even if I'm in that position, right? Like still gonna be doing stuff. I have to, man. I have to. I'm too young. Too young. Got a lot of energy, man. Not really, but you know, that's what the people tell me. Laughing. Yeah, man. It's been about an hour, guys. Oh yeah, I'll throw this up. 1 second. If anyone wants to jump on and talk, we could do that. If not, we'll call it. But here is the link. Invite link, that is. It's right there in the chat. Feel free to click. I think it's easier to do on computer. I think it's also possible on mobile. You can show your face or not, whatever. I'll be here for about 5 more minutes, and then no one takes me up on the offer. I'll bid you adieu. But everyone just like, in crypto is kind of confused. They don't really know why crypto goes up. They're kind of like unsure. They get frustrated. Is crypto going up? It's going down. I thought you said it's going up. It's like, watch the money. The money pumps the Bitcoin. Bitcoin's denominated in dollars. If there's more dollars, more price of the Bitcoin. Not hard. But it's not happening right away. Yeah, it doesn't happen. It takes a while, man. Trillions and trillions of dollars. It takes a while to like disperse. You guys know about the laws of physics, the law of diffusion, right? Like particles go from high concentration to areas of low concentration. That's what gases do. That's why they spread out, right? That's what happens in water. That's why you like put a drop of red dye in water. It slowly disperses. Same thing with money, because money is AKA liquidity. It shares a lot of the properties of liquid, right? So you got to wait for that diffusion, but it will diffuse into the risk assets because the world has been off risk assets for a very long time. Bitcoin's up at all-time highs at really high interest rates. This is crazy. This is the highest Bitcoin has ever been up at these interest rates, and it's still up in there. Wait until those interest rates come down, and wait until they pour freaking flames on the fire and print. Now, they're not going to print out of nowhere. They're going to print because something bad happens. I think it's going to be the banking system. We saw a year ago, I think, Silver something bank, right? The crypto bank that was doing a lot of like investing in crypto. They had a problem, and then some bank came and bought it. Well, guess what? The bank that bought it is also in problems now. Oh, would you look at that? They're going to print again. They can't stop printing. They cannot stop printing. They're addicted to printing. They need to go to Printers Anonymous. 6 people. Entropy. Yes. All right, guys. No one wants to talk. Makes me sad. But talk to you later, though. This is Dub Digital. I come on Tuesdays, Thursdays, 12 p.m. Pacific Standard Time. It's been fun. I won't be doing a show on Saturday. I got stuff to do. But until then, guys, talk to you later. Peace.